Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news some commodity prices for some large industrial minerals and producer prices overall are rising faster now. But first in the US, China's carbon market seems to be stumbling in its early stages. Prices are falling and now only $9.90 a tonne. That is far from the New Zealand price of $65 a tonne, where we ended up this week, and the EU price of $103 a tonne. It's even above the $25.30 a tonne for the moribund Australian carbon market. Meanwhile, China's new bank lending rose less than expected in August and not really bouncing back from the 9-month low we saw in the previous month. Slowing credit growth indicated weakening financing demand from companies as their economy slows. And German consumer inflation came at almost 4% in August and a 28-year high. The US Producer Price Index rose more than 8% in August from a year ago, more than expected and its biggest annual rise since they started keeping this data in 2010. It seems less likely this sharp producer price pressure is transitory. It is not just the US phenomenon, however. China reported its PPI rise earlier last week at close to 10%. Japan recorded nearly 6% for July, Germany reported 10%, Taiwan 2%, and South Korea 7%. Australia's 2.2% change is unusually restrained, but New Zealand's 7% is mid-ranking on a world scale. One response the rest of the world seems to be taking is to spend up big on new capex, driving productivity improvements. Global capex spending is booming, especially for software. Separately, the Americans are reporting that they will import more beef at higher prices. The same report says their milk production will fall, and price forecasts were raised for that. And Canada reported that their August employment rose 90,000 in the month, 2/3 of it as full-time employment. In Australia, the APRA boss says they are monitoring the rise in highly leveraged mortgages as the regulator considers potential macroprudential measures to cool their surging housing market. And it's a market that is expected to fly again when the pandemic restrictions ease and vaccination rates rise. US Treasury 10-year yield opens today at just on 1.34%, so unchanged since the close of trading in New York last week. And the price of gold has slipped $4 today, now at $1,787 an ounce. And oil prices have held unchanged over the weekend, so in the US they're now just over $69.50 a barrel, while the international Brent price has risen to just over $72.50 a barrel. That's about a 2% gain over the past week. And the Kiwi dollar opens today at 71.1 US cents, and little change from this time on Saturday, but 40 basis points lower since this time last week. Against the Australian dollar, we're a 0.5 cent firmer, and just over 96.8 Australian cents, and 70 basis points higher than the whole week. Against the euro, we're unchanged at 60.3 euro cents. That means our trade-weighted index starts today at just on 74.2, little change from both the day and the week, and still right at the top of the 72 to 74 range of the past 10 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.